Good evening and welcome to the Daily Market Update. The DSEX ended flat today, marginally gaining 3.78 points or 0.08% and settled at 4,865 points. Market turnover was 3.54 billion Bangladeshi takas, which is an increase of 14.22% compared to the previous trading day. MJL Bangladesh and Padma Oil from the fuel and power sector, City Insurance from the insurance sector, and Envoy Textile from the textile sector mainly pulled the market up today. On the other hand, RAC Bank and United Commercial Bank from the banking sector, Beximco Pharmaceuticals and Square Pharmaceuticals from the pharmaceutical sector, and Grameenphone from the telecommunications sector mainly dragged the market down today, keeping it flat. In terms of sector-wise return, the fuel and power sector posted the highest gain of 0.89%, while the insurance sector registered the second highest gain of 0.83%. On the other hand, the tannery sector posted the highest loss of 0.23% today. 6 textile companies and 4 NBFIs were among the top 20 gainers today. Bangladesh Welding Electrodes, Regent Textile Mills, and Phoenix Finance and Investments registered the highest gain, while Premier Leasing and Finance, Prime Finance and Investment, and Family Techs, BD, were the top losers today. There was no disclosed price-sensitive information for these stocks. The trading volume of Talu Spinning Mills, International Leasing and Financial Services, and Uttara Finance and Investments increased significantly today compared to the average trading volume of the last 3 months. There was no publicly disclosed fundamental reason for the volume increase for the above-mentioned stocks. Today's top 2 news: Bangladeshi apparel exporters are expected to shoulder a significant share of future EU tariffs by lowering their own prices once duty-free access expires. A new study is warned, highlighting risks to profitability and long-term competitiveness. The study finds that if the EU imposes a 10% tariff on Bangladeshi garments, exporters would need to cut their pre-tariff export prices by around 4% to stay competitive, meaning nearly 40% of the tariff burden would be absorbed by exporters rather than passed on to European buyers or consumers. While this strategy may help preserve market share in the short term, it could gradually squeeze margins and investment capacity, underscoring the urgent need for productivity gains, value addition, and market diversification to ensure the sector's resilience in a more challenging global trade landscape. Foreign loan commitments from development partners surged by 133% to 1.22 billion United States dollars during the first 5 months of FY 2025-26, while actual disbursements climbed 26.38% to 1.96 billion United States dollars, according to the Economic Relations Division, (ORD). The data also show that Bangladesh repaid nearly the same amount it received, settling 1.89 billion United States dollars in principal and interest over the period, after a subdued performance last fiscal year amid political unrest, administrative disruptions, and shaken donor confidence. The recent rebound in commitments signals a gradual restoration of trust, hinging at steadier development financing as stability begins to return. That's all for today. Thank you.